Today we are talking about student loan repayments. Danny, they are restarting, I think, this week. My wife's student loans restart on the 15th is when the payment's going to kick in, I think, on auto pay. I thought this would be a good topic. I know we may be a little bit late to it, but we still have a few days for most people, before loans start to kick back in.
Just going to sneak it right in there.
I know. To our listeners, you may or may not have payments starting on the 15th of this month or at some point this month. It may not be this month for everybody. I've read online that some other folks will have payments starting maybe next month or a little bit later. It may be different for everybody, but for what it's worth, Danny and I wanted to touch base on this topic of student loan repayments. We've now been, how long has it been, Danny, since they've been on hold for most people?
What was it, middle of 2019, right?
Or maybe 2020 it was.
Okay, I'm not sure exactly when, but
I'm forgetting the date.
3-ish years?
2 years maybe?
Okay.
I don't know. It's been a long time. Long enough to the point where I don't remember when they went on hold. So they are going to be turned back on. And I think this is worth exploring for a quick minute here, because
definitely
a lot of people might not be prepared to transition back to payments. So
yeah, very much out of sight, out of mind, right?
Exactly. And at this point, I fear a lot of people have gotten used to this increased cash flow from their budget, like not having to account for those student loan payments. And hopefully, people have been putting enough aside or maybe saving the difference in the meantime. But
that certainly would have been the prudent thing to do.
Yes. But to our listeners, whether you've been prudently preparing for student loans to kick back in, or maybe you've let your budget slip a little bit and you've spent that extra money, let's kind of huddle back today and let's just cover a few important things to think about. So first things first, check with your loan provider. I think this is pretty basic, but just really make sure your payments are all set, right? Like, I know people who have changed bank accounts during the pandemic and have switched banks, and just make sure you're able to log in to your loan provider. Check and make sure you've got your payment set up correctly, the right bank account, the numbers, the routing number, the bank account number. Verify when your payment date's going to start, and make sure you have your login info correct so you can really manage that. For a lot of loan providers, if you set up auto pay, they'll even usually kick off a little bit of an interest rate for a discount, like 0.25%, depending on who your loan provider is.
Yep.
So just get those ducks in a row. Don't go into this blind, and don't let it hit you off guard. Just make sure you get those basics set up and in place before those payments kick in.
Yeah, and I mean, loans are sold so often, debt is sold so often, you may not even owe the same provider at this point, right? You could have a totally new provider that you have to send those payments to.
Right. One of my wife's loan providers switched. Somebody else bought out the debt, right? And now it's on a different login screen. Now, you have likely gotten a sea of emails telling you that this was happening. But I don't know about you, Danny, but there are times when I just kind of blast through my emails and I don't really read everything.
I'm so busy with work emails that my personal inbox is an absolute travesty.
Yeah, so just, don't make assumptions. Really just check, double check, make sure it's okay. The other thing too is, this is going to sound so elementary and basic, but make sure you have enough in your bank account for that first payment, right? Like, that could sneak up on you. If you're not sure when that payment's going to kick out of your bank account, it could be, on auto pay or be drafted on a certain date. Just make sure you're going to have enough money in there to cover that first payment coming up. Start off on the right foot with this transition back into making payments on your student loans, if you are somebody who's going to be doing that. The last shout out I'll give before, Danny, I want to talk with you about some more personal financial planning things.
Okay.
But something I want to invite our listeners to, I found a really good article that was helpful. We'll post it in the show notes. It's from studentloanplanner.com. There's a financial planner by the name of Travis Hornsby. He's a CFA and a CFP. And it looks like he updated the article last I checked just on September 21st of this year. So he goes into the income-driven repayment plans, save, pay, repay. There are all kinds of special plans out there that you may or may not qualify for.
That's good to know.
Danny, we're not going to have time to dive into them today because they are very complex. But
got you.
Do check out whether you might qualify for a special plan and make sure it's actually right for your situation, right? Don't be taking advantage of something just because you want to punt off a debt that you want to avoid paying. Make sure that it actually lines up with your situation and makes sense. Student loans can get very, very complex. So just make sure you really read into some of that and see if there's any options out there that might be applicable to your situation.
Okay, good to know.
Yeah. So with that out of the way, let's talk about some financial planning things to consider, Danny. So I was trying to think with the student loans kicking back in. I jotted down a few episodes you and I did in the past that I think are relevant. So first one, I already mentioned it at the beginning of this episode, but revisit your budget, right? Episode 8, the budgeting imperative, go check that out. You may need to cut back or reduce savings goals, cut back spending or reduce savings goals. That is okay, right? I mean, things come up in life. Look at it this way. You've had a period of time now where you've been able to leverage that increased cash flow, hopefully to your advantage. It's going to come to an end for a lot of people. That's okay. Revisit that budget. You can make it work. Stay diligent with your budgeting and find a way to keep your savings going and still fit in your monthly debt obligations that are coming back online.
Definitely.
Yeah, I think the other one too, Danny, you have spoken a lot about aggressively paying off your student loans in the past.
Yes.
And I actually find it inspiring. So everyone's situation is different, right? I mean, whether you should aggressively be paying it off or not is going to be up to you and your situation. But if you are considering it, you might revisit episode 5 that we did. Can we view debt repayment as its own asset class? The act of aggressively. Aggressively paying off the debt. It could be an attractive rate of return depending on your interest rate.
It was an attractive rate of return and a great psychological rate of return.
Yeah. Well, Danny, to your point, you had, I don't want to misquote you, but I think you said almost something along these lines of you aggressively paying off your student loans was one of the keys to unlocking the ability in yourself to stay invested because you didn't have that burden, right? I mean,
I'm not worrying about the volatility of the market.
Right. You had delayed investing. That may not be for everybody, right? But if you're the kind of person who's very motivated by being out of debt, then maybe consider that strategy if it's right for your situation. So
agreed.
But the emergency fund too, right? Like Danny, when we were talking about it in episode 3, the emergency fund conundrum, you and I walked through a more prudent way to calculate what an emergency fund would be for you.
Yeah, real nitty gritty. It's good.
Yeah. If your emergency fund has not been accounting for these new debt obligations, these monthly payments coming up, you might want to revisit that and just make sure you are really building that in terms of the number of months worth of expenses you're setting aside.
Your 6-month goal will need to increase to account for those mandatory debt repayments.
Right. And depending on whether you have a 6-month goal, I mean, some folks might have a 9-month or a 12-month emergency fund, or maybe a 3-month, right? We talked about how differing job situations could alter that, but the demand on your emergency fund might be increasing overnight, right? As soon as these payments restart. So just give that another look and make sure you have that topped off with a good cushion.
All right. Good to know.
Yeah. And then Danny, I don't know, you and I talked about in episode 12, should you refinance debt? We are in a high rate environment. It is hard to say whether it's going to be right for everybody. Obviously, if you're one of those unique situations where you have a career field where you might have some type of loan forgiveness, refinancing might not be the right choice for you. You have to really explore that.
Yeah, just keep in mind, if you refinance what is very often, government tied debt, federally subsidized debt, those kind of things, when you refinance that will almost certainly be through a private entity, correct? And then you lose any of the kind of forgiveness programs or different aspects of that might be available on the government side. So that's a risk you need to be aware of before making those moves.
Yeah, great call. I mean, that is the biggest thing to be aware of before doing that, before you pull the trigger on something like that. If you are going to refinance debt, Danny and I, we did a good breakout of the different motivations you might have for refinancing, saving on interest, saving on the payment, or a combination of the two. Episode 12 really does do a good deep dive in that. So before you go refinancing debt, maybe give that episode a listen and just, dot your I's and cross your T's and make sure that it actually makes sense for your situation. Might be tough in this high rate environment. Some of you who graduated, in a relatively high rate environment, you might have limited options on the table is what I'm trying to say. So yeah, I think those are the main points I wanted to cover, Danny. I think to our listeners, keep your heads held high. This is fine. You can adjust to this new environment and revisit your emergency fund, revisit your budget. Just make sure your plan moving forward is all set to go, and you'll take that next step forward towards financial freedom.
All right. Thanks so much, Chris. Thanks for walking through this. Everybody, check out that link that we've added below the show notes, and we will see you on Thursday.